They don't understand. One of the things that if you have a replacement cost policy, you need to understand, especially now at this state of the game, you need to know what recoverable depreciation is and how they take that depreciation in order to make sure that you get the work done, because they're insuring that risk and they want to make sure that it's built back like it's supposed to be. So what that means is that once you have it built back, you put the new roof on, right? And they want to pay you, but they withheld some money. You submit photographs and the invoices and a copy of your canceled check or however form of payment you made, and you submit that to the adjuster, and they should pay you that recoverable depreciation within 30 days. They should pay it immediately, but if they don't pay it within 30 days, it's considered arbitrary, capricious, bad faith.
And that's
Well, one of the problems is, these homeowners policies have developed over many, many years. And so as certain claims have been made, the insurers decide, we want to cover that or we don't want to cover that. And if they don't want to cover it, they put language in the policy saying, we're not covering that. And so what a lot of people don't understand is an adjuster will tell them something, and it may not necessarily be true, and it's up to the insurance company to prove an exclusion under the policy. So more often than not, the policies start out with, it's covered. And here's a list of exclusions. Here are things that are not covered. And then here is a list of things that you have to do, these policy conditions. You have to let us inspect it if we want to take a sworn statement. You have to protect it as quickly as you can, those types of things. I just had a situation where, the photographs of the ceilings coming down, the roof is almost completely off in Laplace, and they said, well, you gutted it too fast. We didn't get a chance to inspect it, so how can we know that all these rooms look like this? And they only took a handful of pictures. They didn't go around like an adjuster taking pictures. And so, we used that portion of the policy to say we have a duty to mitigate our damages or make our damages less by getting in there as quickly as possible, because had we let that water sit, we'd be making a claim for mold and remediation and everything else. So, at one breath you're saying, oh, if you don't go mitigate your damages, we're going to deny your coverage. But at the same time, you're saying, oh, wait, you gutted it before we got a chance to see it, so you violated the other provision of the policy by giving us the opportunity, but not giving us the opportunity to view the damages. So those are the kinds of things that people are hearing. Perfect roof example. They're basically just fighting over a roof, a new roof versus repairs. So the insurance company sends two adjusters out to re-inspect. The person's roofer is there. They hop on the roof, and he is lifting up the shingles. This happened, in February. He's lifting up the shingles. And the adjuster says, oh, well, it's not going to seat right. They'll seat back down in the heat of the summer. Okay, so wait a minute. So you're telling me it really wasn't that hot when we got back in September? And also you're telling me, am I supposed to leave my roof exposed for 10 months on the hope that these seal tabs might seal back in the summertime? You owe me a new roof. And so those are the kinds of things that they got us involved for, and we got their claim paid because they know they're just making stuff up and hoping that the insured will believe it and walk away. It's winning through attrition. They're going to wear you out, and they win.
so, Doug.
We realize that this is property damages, right? There's not some, nebulous pain and suffering component to it where there's a lot of room for negotiation. We realize that the number that we throw out there is the number you need to be made whole with. And so we try to get you as close to that as possible, and not take a big portion of the recovery, because we understand that once we do, then you've really moved back from where you need to be. Well, we have a team of adjusters, licensed contractors, that will go out, and they will, more often than not, we've not seen a situation where it hasn't happened, but more often than not, they will go out and they will identify damages that were either intentionally left off by the insurance company's field adjuster, or the field adjuster was not properly trained. And so they will go in and put these things in the claim summary. They will establish photographic evidence of it, because when we tell them to go out and look, we say, listen, you have to look at this claim just as if you're going to be explaining it to a judge or jury one day. And we need backup. We need to prove our case. Like Doug said, it's up to the insured to prove their damages. You can't just leave it up to the insurance company to do that. So we make sure that our adjusters, our licensed contractors, they go out and they document the claim and they find damages that are storm related, so we can put it into a package and give to the insurance company to allow our insureds to be, or our clients to be, made whole. There's a line drawn in the sand, the insurance company, this is all we're paying you. And you've got about 25% of what you really need to be made whole. We take that and we get up to that number, we submit it to them, we prove your case for you, and then we only collect on new money. So if your claim's $100,000 and they've paid you $20,000, we're only going to take a fee on the money that we collect for you. We've seen contracts from other attorneys, from public adjusters, where they get a percentage of the first dollar, especially with these public adjusters. They're going to get a percentage of what they write, and part of what they've written is something the insurance company's already given you. So they are now all of a sudden getting a higher percentage on the new money. So be careful when you're looking and dealing with the contract and how it works, and can you terminate them, and what happens if you terminate them, and all these sorts of things that are important if you're now looking for someone to take over your case. Well, typically the first thing they will do is ask for the opportunity to re-inspect. So then what they'll do is they'll take the Xactimate estimate that you've provided them and then give it to their field adjuster and say, here, go out and re-inspect based upon this. And so, depending on the extent of the claim and whether or not the insured wants to, go that route, we'll have that adjuster, our adjuster, go back out and meet with the insurance company's adjuster, or just provide them with the claim summary, and then they'll take that claim summary and look at all of the things that our adjuster has developed in terms of a scope of work and compare them and say, yes, you're right, no, you're not right. We've had situations where that has happened. It was an $82,000 claim. They came back out, they initially offered $10,000, which is crazy. Then they came back out, readjusted it, and then offered $77,000. So we were $5,000 apart. But then they put something in the email to the client. They went directly to the client instead of through us and said, we want to offer you $77,000. Please let us know if you accept this amount. They can't do that. If they've now reevaluated their assessment, that is satisfactory proof of loss. An insurance company's estimate of the damages, even reinspection of the damages, is considered satisfactory proof of loss under the law, which means they have to tender that amount. There's no precondition that the insured or the client accepts it. They have to tender that amount. And so I pointed that out, said it's been over 30 days since you've made this offer to pay and since you've re-inspected the property. If you want to pay us the full amount of the claim, we're willing to walk away from the penalties and attorney's fees issue and get this resolved. And so we got to check the next week. So it's a game that they play. And again, like Doug said, they just want to kick the can down the street and hold off on their money while they continue to collect more premiums. And keep in mind, we're only a few months away from hurricane season starting again. And a lot of people have not gotten their claims paid, and they still have blue tarps. And now they're freaking out because their insurance company doesn't want to renew them because they haven't gotten their roof fixed, but they haven't paid them to get their roof fixed. So it's a real conundrum that the citizens of Southwest Louisiana and Southeast Louisiana are dealing with right now, and it's horrible.
Yeah.
Well, I mean, I think the headline at this stage of the game is the line has been drawn in the sand. You know, you've been trying to fight your battle, and good for you. God bless you for doing it. You've been trying to fight your battle for 8 months now, you know, and it's not getting you anywhere. And hurricane season's coming again, and you've got to get your roof put on. It's time to take the next step, and it's time to get someone there to push the ball forward for you and get what you're entitled to from the insurance company. And at the moment, you know, people are reluctant to do that. You know, well, I don't want to have to pay an attorney. I don't want to go to trial. I don't want to do this. But, you know, back when we were handling Katrina claims years ago, you know, we were going to trial, and my client was just nervous. I'm like, why are you nervous? You weren't going to hire us in the first place. You were going to walk away from this, and we said, let's bring you there. You got nothing to lose. So let's move forward, and let's you know, just get on the stand and talk about your experience with the adjuster and what the adjuster told you at the time and what really happened, and just go tell your story. And fortunately, we ended up settling the case for, you know, a very good amount. And you know, they were relieved that they didn't have to go to trial, but at the same time, at this point, there's not a whole lot more for you to lose. Like Doug said, you know, it's a contingency fee on new money. If we don't collect anything for you, you pay nothing. And so that's how confident we feel that you've been underpaid, first of all, and that's how confident we are in our abilities and the abilities of the personnel that we have working for us to get you to a satisfactory number, to make you as close to whole as possible, or even beyond if we can establish clear penalties and bad faith.
Yeah.
During Ida, actually, I really had no damage in Katrina. We were very fortunate, and very little. Some shingles came off in Ida, but you know, that's the game, right? So my deductible used to be a couple of $1,000. Now it's $27,000. So my house pretty much has to burn down for me to collect on a homeowner's claim. But I got to do it, right? And so they've been increasing our deductibles since Katrina, and they've been increasing our premiums since Katrina. And now all of a sudden, when we have a claim that exceeds our deductible, they don't want to pay us. How many people have gotten that letter saying, oh, sorry, the extent of your damages falls below your deductible. We're not going to write you a check for anything. And so you've made this claim, you've got a claim on the books, it fell below the deductible, and they're not going to pay you a penny. And so, you know, we've gotten those types of claims in the past, and, you know, gotten those up substantially higher and made the insured able to go back and at least do the major items that needed to be done to protect their own.
Take your attorney hat off. Put your homeowner hat on.
Mm-hmm.
How does that make you feel?
It's horrible. It's horrible. And look, it's unfortunate because, you know, I own my home. You know, I've been paying on it, you know, 60 years old. I've been paying on it long enough. I own my home. But I feel badly for the people that don't own their home, and then they now can't get insurance. So now they have to get something called forced place insurance, where the mortgage company is requiring that they get this, and they're going to pay even a higher premium than they would be able to pay in the open market. And, you know, they're just paying this money hoping that nothing happens. And if it does, here we are all over again. I've got to deal with this high deductible. And worse than that, I've got to deal with this, you know, this young adjuster who may or may not have any experience or has been trained for 2 or 3 weeks to come in and assess my damages. And it's just, it's a frustrating process.
To get their stuff or go?
We maybe tried, you know, after Katrina, I know between Doug and me, the law firm, we handled well over 1,000 Katrina cases. We may have tried a handful among us all. They don't want to go to litigation. They don't want to go to trial because they know that on that jury, the vast majority of the jury pool had substantial damages and were likely not paid what they should have been paid. And so they know that even the judges that are sitting on the bench, if it somehow happens to be a judge trial, also have experienced this sort of behavior from the insurance companies when it comes to large losses and mass claims, et cetera. And they don't want to go there. And so we'll settle on the courthouse steps. The vast majority we settled through a mediation process where we put the case together, we put the case of their bad faith together, and we've gone before a mediator, and the mediator presents it to them and says, what are you going to say about this? How are you going to respond to this? What is your defense? Because it doesn't sound very promising once all of these facts are put together properly and laid on the table. And, at that point, they usually find the checkbook. And, unfortunately, it's sometimes a year-long process to get you there. But at the same time, it's something that the insured or the client doesn't want to fool with. They don't want to fight it for another year. Because without that threat of litigation, without that threat of a jury or a judge slapping them with penalties and attorney's fees and everything else that may come their way, there's really no way to move this line further. The line's in the sand, and until there is some sort of threat that they may get hit with a big judgment. Oh, and by the way, pay their own attorney's fees and pay our attorney's fees. So they know that there's going to be a whole lot more money to spend on the back end if they really want that to be the hill they're going to die on. And so our job is to take that and push it further down the road, get you as close to whole as possible, and then explain to the client, listen, at this point, if we think it's a good settlement, it's gotten you right there, or it's gotten you a few $1,000s from there. It gives you closure. It allows you to get your check. It allows you to move forward and get your repairs done, and hope and pray there's not another storm.
But why so passionate about this? Is it the local? Is it because it's everybody. It's your friends. It's people you know. It's flat out just wrong. I mean, why so passionate?
So I started my career working in-house for an insurance company, and I did it for many years. And even when they pulled out of the state, I continued to represent that insurance company and others. And then Katrina hit, and I saw what these property and casualty insurance companies were doing to my neighbors, to my families, to my friends, to my community. And I made the jump. I decided, this isn't fair, and I'm going to go ahead and switch hats basically, and jump into the game, because this is an injustice and it needs to be righted. And you're right, it is a passionate thing. We're very passionate about making our clients happy with the result. We're passionate about getting our community rebuilt. Instead of people just having to deal with getting their homes redone. And look, it's very personal to them, and I understand it. It's their home. It's probably, for the majority of the people in the area, the largest investment that they have. And now all of a sudden, they purchased this insurance, paid higher and higher premiums for it every year, and now they're getting treated this way. There's a unfairness about that needs to be made right.
Yeah.
We heard early on, well, I sent them a roofer's estimate for a new roof, and they wouldn't pay it. Well, you can't just send the roofer's estimate, because all that is evidence of how much it costs to replace a roof. You have to prove your damages. You have to prove your losses. And in order to do that, you need to prove that the roof needed to be replaced, not just get an estimate from a roofer that says how much. So we advised people early on, have that roofer write a paragraph that says, we looked at the roof, we examined the granules, we examined the seal tabs were lifted, take photographs, document, prove your case. And so that, I think, helped a lot of folks move the line a little bit and maybe get closer to being paid without having to contact us at all. And so anything we could do to help people help themselves, we offered that, and we're still offering it, on a regular basis.
To me, the ability to take a person and just explain, we're here to level the playing field. Right now, the field is not level. It's set for failure. Your deductible at $27,000. Didn't used to be that way. It grew, and somewhere along the way, you probably had a choice. You can pay twice the premium and lower your deductible.
Right.
Who can do that?
Right.
Who can do that? So you roll the dice a little bit, but I mean, it's a system to favor the insurance company. So I guess my question is, how important is it for you to be able to level the playing field? If that's how you would.
Well, and it's why we do what we do. We've been in business a long time. You know, we could be setting up our exit strategy, but when this type of thing happens, you know, we stay in the game. We try the cases. We know what discovery to look for and where, you know, to lift up the rocks and the stones to find the evidence that you need to really nail them. And they know that. They know that from the types of letters we write. They know that from the questions we ask. They know that from the responses that we give. And so once they know that a competent attorney is involved that's been doing this for many years and has experience after just about every storm that's come through, dealing with claims, dealing with adjusters, trying these cases, even making some case law, they know that they better pay, and we're going to go to somebody else and try to shut their claim down. But we know that this is a good group of attorneys. We know by the way they write, by the way they respond, by their professionalism, that they are going to do a good job if we have to get to the finish line.
Why we'll wrap it up, and then for something that I've missed, but for the homeowner out there who's got whatever, I know we've done a lot of roofs, but they've got issues. They're still with their insurance company. I'm calling Nicaud Sunseri because why?
Well, for experience, first of all. Like I said, I know we've handled over 1,000 claims after Katrina. We've mediated claims, we've tried cases, we've put together claim summaries. We have a collection of people in the background, the adjusters, the contractors, the engineers. We know who testifies well and who doesn't. We know who can get up and make your case for you. That all comes through experience. We're not some carpetbag law firm or public adjusting firm that's here from out of town to make a big score and run back to whatever state they're from. And they're going to try to settle your case for as low as they can, get their quick money and get out, because they don't want to keep their offices open for another 3, 4, 5 years and continue to come back and try these cases. Oh, and by the way, when they do, are they going to be familiar with any of the judges, any of the court local rules? Are they going to be familiar with any of that? Probably not. Probably not. And if you listen to some of those commercials from some of these law firms, there's a little quick squiggly informational thing in the last 10 seconds of the spot, and if you listen closely, it'll say your case may be referred out. So you don't even know what lawyer you're going to get. This is just some service that's doling out cases on a number basis, and you don't know what type of experience they have. You don't know what type of you don't even know where they're from. And so, you know, it's important to hire local, and it's not just like buying local groceries. It's hire local because we've been practicing here. We've been working here. We have relationships with court personnel, and all of those little things add up to usually a better result. Well, of course not. Of course not. You know, there are a lot of reasons why that's not the end of the line. They want to convince you of that because for 2 reasons. Obviously, they want to pay as little as they can possibly pay. They've got people that are claim supervisors and claims managers, et cetera, looking at their work. And they want to do good for their for the people in the upper chain, right? To show how great they did, and I want to be maybe moved out of the property division into something a little more risky. That way, I want to show you how good I can do. So that's one of the reasons, and then the other reason is we have, as you know, because again, I worked in the insurance side. These adjusters have a duty to close files. Okay, the insurance companies have reserves set, right? So they've got reserved money and reinsurance to cover these losses. Well, they want to make sure that those reserves are covered. And so as many files as you can close, that's the game at this point. We want to get back to the regular business of adjusting claims. We want to get rid of these homeowner claims. So their goal is to A, pay as little as they can pay, and B, close files. And so they don't want this thing to drag on until 2023 and beyond. They want to get rid of it. And so when they tell you this is the end, you know that if you threaten to go the long haul and to go to trial, they're going to have to spend a lot of money on their own attorneys. They're going to have to spend a lot more money on their experts. They're going to be taking depositions and generating court costs. They're going to be doing all of these things. Oh, and meanwhile, that claim's going to still be open, which is kind of a no-no in the insurance industry. We want to close claims. So they're going to have this cost of defense. They're going to have perhaps penalties and bad faith penalties and attorney's fees to pay. So now they're going to pay their side. They're going to pay our side of the attorney's fees. They're going to pay the damages that whatever the judge or jury comes back with. And if they find them to be in bad faith, they're going to pay a 50% penalty on top of it. So they know the risk on the back end is probably not worth the reward of holding tight to these nickels and dimes. Let's go ahead and pay the claim, and then we can avoid that.
Is there anything more infuriating? We're not talking about scammers here. We're about people who did it right, who do it right, who pay their bills on time, who pay their other. Is there anything more infuriating than to see these guys basically get screwed?
No, and that's why we're doing this. I mean, we are, and you know, it's funny because so many people have come to me and said, you know, it's just that they lied to me. You know, and if they wouldn't have lied to me, I probably would have gone away. I probably wouldn't have called you. But I could just tell they were making it up, that there was no basis for what they were doing. And they lied to me. And you know what? People have come in and sat at this table and said, here is my timeline and here is my list of every time that I called and spoke to the adjuster. And this is what they said on this date. And then this is what they said on this date. And it was totally opposite from what they said before. And they just kept making it up as they went in order to make the claim go away and pay us as little as they can pay us. And that's infuriating. And you know, the thing about this is there are different types of insurance claims, right? There's a first party claim and there's a third party claim. A third party claim is you and I get in an accident. Your insurance company you're at fault and your insurance company has to step up to the plate. That's a third party claim. I'm suing a third party and a third party's insurance company. This is a first party claim. This is my insurance. You're my insurance company. You represent me. I'm paying you to do what you're supposed to do to make my claim whole. And to then have them turn around and basically screw the person paying their bills is very infuriating.